All right, guys. So we have our first SRS segment. So this is something that we've transitioned away from. So many of y'all know about AMS, Advanced Market Sales, and recently we've gone through a lot of changes. And one of the things that we want to make sure that, or our goal this year is really to bring these advanced products, simplify them because they're not really advanced, and be able to kind of take what was off to the side and bring it into FFL and make it one. Like we understand that mortgage protection and final expense are bread and butter. They always will be. But the simple retirement solutions, as we're calling it, and it's not just retirement stuff. There's infinite banking. There's all kinds of different ancillary products. But the main two concepts we talk about a lot in this, this platform is IULs and annuities. And, I've interviewed a lot of agents recently, got a lot of feedback. And, one of the things my question has been is, why does your agency not sell more annuities? And more often than not, the feedback we get is it's confusing. The training's confusing. There's a lot to it. I go, and I have Danielle Byrne here with me, who is one of our top annuity producers, Hall of Fame member. And it's like, when I hear that, Danielle, I go, are they complaining or is there some truth to it, right? So, because, we don't, at FL, obviously, we don't do complaining. My thing has always been, what Sean said for years is, if you have a complaint, have a solution. If your complaint is complain, you're just bitching, right? But if you have a complaint, what's the solution? And so a lot of them, so the ones I do value, the ones I believe are not just complaining, they go, Mike, listen, we would sell more, but we need to simplify the way we talk about it. And I do believe that, because full transparent, I've interviewed some annuity IUL producers and I go, hey, break this down simple for me. And I go, wow, even I'm confused now and I shouldn't be, I work here. So the goal today is really just I'm going to interview Danielle, and we're going to talk about IULs and annuities, and we're going to break it down the same way, I guess, Danielle, you would break it down for a client, for someone who has no knowledge of it, because a lot of our producers, they're coming in, they have no knowledge of life insurance. We don't hire, recruit a lot of agents that have been life insurance agents for life, and because it's just not our model. It never has been, right? So these are a lot of our producers, especially our top producers, have never been in this industry. This is all brand new. And we do believe that, annuities and IULs, there's so many benefits to writing them. Financially for you, the agent, for your client, it's like you've already helped them out with one of these products, and now, you helped them out with the life insurance. But there's other needs they have. And this will help just solidify. It helps make that client for life, like we talk about, or we used to, and I think we've kind of lost sight of that a little bit. So I'm excited for just kind of bringing these two pieces of our business more together, right? I feel like they've kind of been separated, really not intentional, just we've got so focused on these life goals, but it's like for us to be $1 billion company, annuities and IULs are going to have to play a big part of that. And I think we saw at this past convention, a lot of these, there's a lot of IUL awards, a lot of Hall of Fame members that were heavy IUL, mix of annuities. And Danielle, you were one of the ones that, probably one of those first adapters where you're hitting Hall of Fame, you sold life, but also supplemented it with a lot of annuity production, which allowed you to kind of hit those numbers even quicker, so it's part of why it's like, who do you have talk about these things? The people that sell them more than anyone, right? So without any further ado, Danielle Byrne, thanks for joining us.
Absolutely. Thank you so much for having me.
Absolutely. So what year did you first hit Hall of Fame with us?
2016.
2016. And was that the first year you started, or I feel like, no, you were there 15, right?
No, I was there in 15, but not for a full year.
Got it. Okay.
For a month.
So 2016, your first Hall of Fame. Were you all life at that time, or were you selling annuities out of the gate?
I tried to sell annuities out of the gate.
Okay.
But I don't know how successful I was. I tried.
Got it.
But
so it was mostly life.
Probably, yeah.
And then was the second year, was that when you kind of, I guess, had that hybrid or mixture of life and annuity?
That's definitely when I started to get the taste of what it was like to do annuities.
Yeah.
And I just, so that was more of a hybrid. That was definitely more of a tried to get both.
Okay. So, at that time, it took you over a year to even get acclimated to the annuity, that piece of our business. And it's like, that's what we were trying to avoid today. So we'll get right into that piece. We're going to start with annuities. And we'll keep it simple. So, if I'm your client, Danielle, and you ask me about my money, hey, I got whatever, 400 grand in a 401k. I need to move it over. Or I have this. You identify the money, but I don't know what an annuity is. Walk me through that conversation. How are you explaining that to me? So I go, you asked me the golden question, right? What do you have that acts like life insurance? I go, I got an old 401k that is losing money. I don't really use that. And then you asked me you're asking me about an annuity. I go, I have no idea what that is. Kind of pick up from right there. How are you explaining that?
Well, I think it's important first, Mike, to just let you know that I don't come right out of the gate and use the word annuity. And there's a reason for that. And I just want to clarify. The reason for that is the same way that certain life insurance companies came on board years ago and said, buy term, invest the difference. Or, there was this idea of the way that something was. And then people got in their mind the way that was. So way back when, it's important to understand, right, if we're going to move forward, that annuities got a really, really bad name a long time ago. So what I will normally say in a situation like that is I'll say, what if I could show you how to remove all of the stock market risk from that bucket of money?
Got it.
So I'm not saying I've got a great annuity. Do you want to see what it is?
Right.
Because this is really important, Mike. This is not about the product at all. This is about the protection for the family and what you already know it can do for that family. So the same way that, we don't talk about rates or mortgage protection when we're setting an appointment is the same way that you don't come out of the gate and say, I have a really great annuity. Do you want to see what it looks like?
Got it. It makes perfect sense because you're right. There has been that, and I mean, you remember, I remember the days of Susie Orman, who annuities are hard, and it's just, you're generalizing. So it's like, are some of them bad? I'm sure they are. I'm sure there's some products that aren't good in every industry, but so that's a great point. So you're not even saying that day one, you're just saying, hey, if I can help, and which makes sense. So now once you get to the part where you now have to explain how this product works, right? Because you are selling the protection, but clients are going to have questions, right? Because the whole reason you're there in the first place is for life insurance. So you start pitching, I got this annuity, like, dude, I just wanted to cover the mortgage or my final expense, right? So once you get through that, you identify and we have plenty of sales training on that. But the idea today is we just want to explain these concepts. So you as an agent, even, because what happens, I believe, Danielle, is we get agents that don't even understand what an annuity is, and they're trying to now sell it to someone. So you don't understand it, your client don't understand it, but you're trying to sell it and everybody's confused. Right. So when you get through that piece, you identify, hey, this is the product, whatever. But if I go, all right, what actually is an annuity, Danielle?
Well, the types of annuities that, and one of the things I'll say is the types of annuities that Family First Life offers are a place to put a bucket of money that will grow as the stock market grows. But when the stock market goes down, it will not lose money.
Got it. Which is definition fixed index annuity, right?
That's fixed index annuity, correct. And it's important here too, Mike, to say even more of a reason why I'm not using that word annuity in the beginning is because exactly like life insurance, confused people do nothing.
Right.
And they will try and make up a bunch of reasons why you can't come back. Their dog will have died, the fish is sick, whatever. All that's going to happen. And really the root of it was you confused them and they're embarrassed that they really didn't understand and they don't like being confused.
Yeah, absolutely. All right, well, let's pick back up there. So you talked overall concept, but explain a little more detail, even to an agent who's going, I still don't really know, like, what is an annuity contract?
So an annuity contract is a place that you will hold money, whether that's money in a checking account, a savings account, a CD, an IRA. None of that part matters, right? Because we can help you with that. All you need to do is identify the money, and then we would go over what we feel is the best product for them. That being said, too, I'm not sitting there saying, yeah, the Performance Elite 10 is the best for you, or the Assure Index Platinum 5 is the best for you. I'm looking at playing the tape forward, just like I do with the life insurance, and saying, this is how it's going to benefit you and your family in the future. So I'm saying, this is where you're going to start out. This is the projected growth over time. Each year, you're going to get a statement. Not every month. Each year, you're going to get a statement. And you and I will go over that and talk about what that statement means. And what you are doing essentially is you are just taking a bucket of money and moving it out of the risk bucket. That's truly the only objective of putting somebody's money in an FIA. They are scared of running out of money. They are scared of losing their money. They are scared of uprising medical and long-term care costs. They don't want to lose any more.
Right. So I'll ask you this. Are fixed index annuities for everyone?
No, they are not for everyone. And that's another reason why I believe Sean has kind of put this team together, because each one of us has a very specialized bucket of information that can really help to quickly identify who they are for and who they are not for. And let me also add this too, Mike. How many situations have we been in as insurance agents and written off and already decided that this annuity wasn't for this person, when in reality it was?
Yeah, I bet a lot. And you kind of alluded to this. So why is it not for everyone? Well, these are not for people that are, I want to say risky, but are investors. It's not for someone who goes, hey, I'm trying to throw this money in the market and see how much I can make. The annuities that we write predominantly are for people that, like you said, they have money that is probably it's already losing money, right? It's in an old 401k. Because normally, a lot of the annuities are, guy has an old 401k, right? Old company, maybe current company, and it's not doing so well. And they're getting older. They're thinking about retirement and how can we stop the bleeding and put this, like you said, in something safe so that we can avoid that market risk. No, we're not going to get the same returns if the market, market's up 40%, bear market, we're not going to get those same returns, but you'll do pretty well, right? So now if that market tanks, what then happens to most of these annuities?
If the market tanks, then they lose nothing in the annuity.
Nothing.
Zero.
Which zero is a lot better than negative 40.
It is. And on the statements, because I need to build this picture for you guys, because year after year after year that you've been doing these, you will get statements like I've gotten this year, where it'll literally say interest rate negative 14, interest rate credited to the client 0. Right? Yeah,
it's just massive.
It really is. And then to add to that too, Mike, you know how we just said that they're not for everyone?
Yeah.
That doesn't mean that you shouldn't show the offer of this solution to everyone. Okay. I want to be clear on that, because with my experience so far being an advisor, I find myself writing off certain clients for showing them the value of this, and I am wrong 100% of the time.
Got it. Why is that?
Because, so for example, I had a client who had $500,000 in a bunch of stocks. This year, he lost $137,000 on paper on his statement. And he said to me, I figured somebody that had that much at risk, who knew the game that they were getting into, probably wouldn't be very interested in something like I had to offer. And after a lot of discussion, I thought to myself, you know what? He's not a super committed type guy. He likes to buy, sell, trade, that kind of stuff. But once I asked enough questions, I realized that he still had a 401k at work that he was contributing to that he could be risky with. And this other money where he lost his shirt, he wanted that protected.
Wow. Well,
just don't short circuit yourself.
Yeah, no, that's a great point. Great point. Ask everyone. So let's, in a nutshell, because I want to move on to IULs. And this is like the first time. Every week we're going to have this SRS segment, and we're going to dig deeper and deeper. And today's goal is really just to kind of introduce you to these concepts as if you've never heard them, right? So in a nutshell, an annuity is it's a contract with a life insurance company. Our annuities, correct, we do fixed index. What that means is shares in the market's gains, not in the losses. Like Danielle pointed out, market tanks, you get 0. Market goes up 30. I mean, what are some of the caps on these? 10, 12%? What on the average annuity?
Yeah, so some annuities have caps, between 8 and 9, yeah, and some don't have caps.
Got it.
I personally like to go into annuities that don't have caps because I just want to have my cake and eat it too.
Yeah, absolutely. So there you go. So some don't, some are 8 or 9%. But the main focus is they all have that cap on the downside. They all have that 0 block, right? You don't go below 0. So it's a safe money product where you're taking a lump sum of money, whether it's from a checking account, old 401k, old 403, some IRA. It's coming from somewhere, and you're just moving that from that product to another. There's no penalties because it's an exchange. You're not actually taking the money out, putting in your account if it's coming from qualified funds or whatnot. So you go, I have these qualified funds and they're going to tax me like crazy. Nope, it's 1035 exchange moves right over, right? So it's really just a safe way to move money. It doesn't cost the client anything. In fact, a lot of these products offer bonuses, so the clients a lot of times make money. I was talking to someone last week where the client made more money on the exchange than the agent did. I'm like, that's awesome. A lot of time we're so used to they're paying for they should, it's life insurance, but this is something where we can help them out and they actually make money, So that in a nutshell, that's a contract with a life insurance company, typically 401ks, those types of, those buckets of money are moved over safely. And the whole concept is to avoid risk, to set up, and there's all type of stuff we'll get on other, calls where we talk about lifetime income, but just in a nutshell, that's what that is. So next, IULs, something that I get the same feedback, Danielle. They're confusing. They're confusing if the wrong person explains it. But the way Sean explained it to me years ago was not confusing. So I'm not going to explain it because that's why we have Danielle here. But if you can just kind of, we for sake of time, we won't get into selling the actual product, but just the concept. So if I'm your agent, Danielle, I started today. I never sold life insurance in my life. And I go, can you tell me what an IUL is? What would you say?
I would say that if you are watching this section of the TNL show, you would take what we just talked about and you would take the same exact concept except apply a monthly premium to it. So it's monthly premium that goes inside of a life insurance policy that earns if the market goes up and doesn't lose if the market goes down. Got it.
And talk a little bit about, so it makes perfect sense because you're paying for this policy, but there's an investment piece almost to it, but under the same concept as the fixed index annuity where you can't lose money and all our products are different. They have different cap, whatever, but market goes up, you make money. Market goes down, you level off, right? And then, talk a little bit about that piece because there's about the premium and how that works because as an agent, I've uncovered so many IULs where they weren't set up properly, right? Where they're just paying minimum premium. You're just, I'm paying $25 a month for whole life insurance. Like, really? How much is the coverage? $200,000. You pull it up like, you're right. That is the coverage. That is what you're paying. Yep. The one thing you're wrong about is it's not whole life insurance. It is an index universal or a universal life policy. And when you're paying minimum premium, it's essentially a term, right?
Yeah, if that.
Yeah, if that. So you can take a few minutes and explain that premium. So, there's a cost of insurance and then there's another piece to it, right? So if you can kind of break that down.
Yes. And so I'll answer that question by saying, a lot of times after I do a annuity presentation, the client will say, well, this sounds, really great. Sounds almost too good to be true. Mm-hmm. Do you have this? Ooh. Okay. So they'll ask me, do you have this? And I say, despite the gray hair and wrinkles, I'm actually not old enough. Okay. And we'll make a little joke about it. Because truthfully, I'm really not old enough yet to have an annuity. Like, give it just probably like 2 more years and I'll probably be fine. But my point is, right? My point, Mike, is that I tell them, and this is the truth, I say, I actually have the version that I make a monthly premium to, monthly payment to. And when I tell them that, I tell them that what happens in my case, though, is a portion of what I pay goes towards the insurance, and a portion of what I pay goes towards earning interest credits. So I usually draw like a circle and then put to like 2 legs coming from it. And then I put COI, cost of insurance, and then I put cash value. And what'll happen is I explain to them that this section here is going to have the cash value, and this section here is the cost of insurance. So it's critically important that we set it up correctly. And that ties in with what you just said before about the ill-funded UL.
Yeah, absolutely. So what you're essentially saying is we have a life insurance product, right? It has a death benefit attached to it. And there's 2 buckets, if you will. You're going to make your premium payment. There's a portion of that payment that has to cover the cost of insurance, right? You have to set up this product, you minimally have to cover your cost of insurance, which it falls in line with a lot of term policies, right? It's, essentially if you only do minimum premium, what do these last? Maybe 10 years, 15, 12, depending on the carrier, right? So if you're doing minimum, you're basically writing a 10-year term. You're better off writing a term policy. That way you can do some return of premium or something along those lines. But the way we use them and how Danielle's talking is, okay, your cost of insurance is going to be X, call it $50. But if we set you up so you can put in $200 a month, well, 50 is going to that cost of insurance, and that other 150 is going to what you said, what was it, investment credits? I like that.
Interest credits.
Interest credits.
Yeah. And, another part of that too, Mike, is that I will often edify the client. If I'm proposing something like this, I'll often edify the client and say, what you need to know is with the carriers that I've been working with, you must be healthier to get a product like this and really make it worth it. So this is for the young bucks that don't have trust funds that maybe can put some more money monthly into this, but might not have that 50 or 100,000 to just dump into an annuity, the way that you can, here in your 60s.
Right. And there's so many things like, we're not going to get too deep now because for sake of time, and also just we want to start here. So hopefully you all understand the annuity. It's a contract between your client, insurance company, keeps your money safe. You're rolling money over for some other fund. Can't lose money. You can only gain, right? The IUL. Hopefully you understand that now. That's a life insurance policy. There's a death benefit. There's a cost of insurance. And then anything above that is interest credits. Basically a safe investment, if you will. That the same concept of that fixed index annuity, that bucket is where that additional money's going. That's what it is in a nutshell. It's very simple. Now, what we'll talk about in the next coming weeks is different types of annuities. There's some immediate annuities. There's some that have certain bonuses. There's lifetime income riders. So we're going to dig into all that stuff over the next few weeks. And then on the IUL side, you can set these up for college funding, right? You can set these up for one of the biggest, allure to this product, at least for me, was the tax-free retirement concept, right? And you got to be careful because there's a certain way to do it. It's not just you set up, you have tax-free retirement. It's not how it works. There's loans, but we'll get into that. But there's so many different ways to apply or to use these products in your toolbox, if you will. So I hope today that y'all understand the basics, the concepts. And if you go, this is too basic, Mike, well, good, because the next few weeks they won't be. But we got to start here. I think so often we try to start up here, right? Let's just bring it back down. So if y'all have any questions, and if you have any questions or anything that you're looking for us to cover over the next few weeks, send them to me. send them to us. We'll vet them, and we'll because we want your feedback. It's like the whole goal with this is to get you guys to the point where you feel comfortable having these products, and they're not an advanced thing. They're not something extra. It's part of what you do. And when you work in all those quadrants, you'll be a much more successful agent.
And one thing, Mike, in closing that I just thought of is when people have a bucket of money like a 401k and they're taking on all of that risk in that 401k, a really great way of explaining, and it works for the IUL too, of explaining why you would do that is you are transferring the risk to a company that professionalizes in risk.
That's awesome.
And
I love that.
You either transfer risk or you retain it.
Yeah.
You have car insurance, you got homeowners insurance because you're not the insurance company. So stop acting like it with your 401k.
Absolutely. Well, that's awesome. We'll end this segment on that. Well, I appreciate you coming in and do this, Danielle, and you'll be on here a lot more. We'll be doing this every single week. But I appreciate the time because this is a very important piece of what we do. And from the other, the good agents, the ones that produce at high level, they care about their clients. You can't have success in sales and not care about the client. So it's like, if you care about your clients, don't you want to take it to the next level and help them protect their retirement, help them, because we're taking care of the mortgage, leave a legacy, that whole deal. But let's set them up so that they can retire comfortably or retire in a way they never thought they could. I saw the opposite. I saw my dad, who didn't have these products, retire on a 401k that continued to lose money. And he had to move down south. He had to downsize. It was not the ideal retirement, So it's like, if we're in a position where we can make sure that doesn't happen to our clients, we got to do everything we can to help them to avoid that. So thanks again, Danielle. Guys, thanks for watching the segment, and any questions, feedback, please send it over.